Welcome to another edition of Cattle Call. I'm Susan Littlefield on the Rural Radio Network, and we are on the road once again this week, this time at the Nebraska Farm Expo, which is taking place in Lincoln. And thanks to the great folks at Growth Technologies for allowing me to hang out in their booth all day and do markets and to do the program like this with Cattle Call. Well, I tell you, week 3, and this is a three-peat. When it comes to talk about this cash and how amazing it has been for our cattle producers, as Brad Kooima joins us with KKV Trading, and looking at the fact that last 2 weeks I said, cash is king, then it was cash is king 2.0, and now cash is the boss, as you put it. Another amazing week that we see. What's your takeaway for what we're seeing in this cash market again for December?
Well, thanks for having me on, first of all. And, with that preamble, I was thinking to myself, I'm tempted to start out with, even a blind pig finds an ear of corn now and then, or whatever that version of that story that people tell,
right.
Being right once in a while, like a broken clock. The market, we've talked about this, how the market seems to be a little different than the old days. Where the futures would be much more anticipatory, would lead, like the name implies. And then since, I think these multiple black swan events maybe contributes to it. Maybe it's just the players involved, but it seems like now for the long speculator to step in here, like he just about needs to be like those folks from Missouri, okay, prove it to me, show me. And that's what we've done here with this cash market for a couple of weeks in a row. And we're doing it again today while we speak. I may have just passed 194 up here. I think 195 is going to happen in the north. There's been a little bit of 193 trade already, which is, last week it was 192. It waited till the last minute on Friday. And a lot of those cattle at 192, Susan, I tell you, are already dead. And a lot of those had a rural address. I'm talking about cattle bought in Iowa that died in either Colorado or died in Texas. Again, which to me is proving that you got a packer that's looking for grade and looking for overall supply. So yeah, it's super fun. Nice to see the way the market handled it and reacted.
After the struggles that we have seen with these cattle producers for so long, it's nice as we wrap up 2024 to see a couple consecutive weeks of positivity. So then the question is, can this continue? Can the demand for the prices that we see and then waiting until for some the 11th hour, is that going to be a possibility into next week?
Demand seems to be a popular concern and question. It is one of mine too. If you find someone that can predict demand for you, please let me know. I'd like to visit with him or her. Supply is one thing, right? We work hard at getting that, and I think we can do as good a job as anybody of getting our arms around what the supply is. I can only look at what I can see on demand. And from what I can see, I see no change. We've got a Thanksgiving weekend where it was record travel, right? That doesn't sound like a recession. Black Friday, all-time record retail sales. Doesn't sound like a recession to me. I'm looking at the stock market chart over here. We're right up on the all-time highs. If somebody wants to predict that all of a sudden somehow today that $12.99 ribeye is too high, more power to you. I do not see it. It looks to me like the middle's very strength here going into which normally they do this time of year, and they're doing like they're supposed to. The grind has been incredibly strong. That's the one cut that is priced above a year ago, and it keeps moving. That tells me that demand is good there. So I'm not going to sit here and say if we have some kind of a meltdown with the recession, of course, things are going to be different. But at this point, how much higher? I don't know, you've pried these wild estimates out of me before, I've been dumb enough to tell you over 200. In fact, I think if it falls right, we can go way past that in the first quarter of the year. Depends upon weather and different things like that. But I think it's our turn. I can give you a whole list of markets that have had this big blow off top. And I think it's the cattle market's turn.
And it's about dang time. You talked about the S&D report. And we always look at the big WASDE report that comes out. And we always talk about things from a grain perspective. But I think folks forget livestock is a part of that report as well. And you were kind of digesting and looking at those numbers and what the USDA is saying going into 2025.
Well, I only brought it up because it is a little out of the norm. In the 44, almost 45 years now that I've done this thing, I can't say that I've ever spent a lot of time on the supply demand report as it speaks to like poultry or pork or beef, because I was told that, hey, nobody cares. And so I didn't either. But now in this environment where you've got algorithms that are trained to read headlines and react to those headlines, I'm not sure that yesterday wasn't a little bit influenced by that. And what I'm talking about is I'm talking about a USDA projection that second and third quarter of next year, we're going to have beef production down 1.5% from what they had expected. Then there's a narrative, and some of that, if you dig through it, it looks like part of that reasoning, unfortunately, which I don't think is a great reason, is because of the border closing with Mexico. Now, I'm very confident that that's temporary. That's a matter of days, not months. And so, as we get past the new year, when that reopens, we'll see if the market doesn't have to absorb that just a little bit as well. But so I think that maybe speaks to a little bit of what the market was doing yesterday. But today, to me, it was all about cash and led by the front months. And it's really fun to see the market rock and roll like that.
So we have a very avid viewer that watches and then listens to this on the podcast as well. And her question is, we're starting to see even higher bred cow prices. We're seeing higher heifer replacement prices out there. At what point do we say as beef producers, okay, this is getting too high. I can't pencil this out to bring these heifers back to my operation or bring these bred cows back to my operation?
Fantastic.
So they're what your 2 cents worth, or
yeah, I'll give you
$200 worth.
Yeah, right. I'll give you my 2 cents worth, right? And that, and what, about $5 now? Get you a cup of coffee. She's asking a great question, and it's a question that I've asked a number of people that are in cow-calf country that'll stand still long enough to give me a decent answer. And I think for a lot of people, you're already there, but it comes from both sides. When I talk to the cow-calf guy, I'll say to him, "Are you going to hold heifers? What do you think?" And there's a few that are, okay. There's a few that are, but the big answer that I usually get is they say, "I can't afford to. I'm getting such a big price to go to a feedlot for these heifers that I can't afford to. My banker says I should, or I'm 72 years old. This is my way out. I'm going to quit." When is it too high? I think you could say that about every segment of the beef thing. Is a 655 pound calf too high at 338, where they sold it yesterday at a sale barn I was watching? 338 for 655 pounders. For me, it's too high. Now for the next guy, maybe he could feed him for half price that I can. But unfortunately, we're our own worst enemy sometimes, us cattlemen are. Where we cannot stand and not have possession. We got an empty pen, we can't stand. We got a pasture that we're not using, whatever it is. Be judicious here. I do think that we've got a pretty good stretch here where we have not started this expansion phase. We've sucked this cow herd down to a bare bones level that if we don't start to expand, you are going to turn this into a specialty market. But I doubt that we're going to go there. We'll start to slowly expand, but use your head. There's no place for the faint of heart. I don't think we're there yet to answer that person's question. I think these people are willing to still, as long as the futures keep going, they're willing to take a try. A few of the courageous ones are, at least.
It's going to be a fun, crazy ride, that's for sure.
Up on the stairs and down on the elevator too, unfortunately.
I know.
Yeah. Okay.
Yeah, that's always in the back of my mind as we talk about these prices. Well, Brad, what's the best way for folks to get a hold of you guys?
Well, kkvtrading.com. Easy to find us. You can learn all about what we're doing there. Otherwise, phone number is 712-722-0023. Good to see you, Susan.
Always good to see you. Brad Kooima joining us this week, of course, with Kooima & Barlick, located out of Sioux Center, Iowa. Quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call right here on the Rural Radio Network.